The markets are showing very solid and encouraging signs of a recovery after the big sell-offs that we saw last year. The world outlook is still clouded, as it always is, but it does appear that things are certainly improving in China, and there's the first signs coming through from the United States that things are possibly on the improve. But the thing we really focus on is the resource sector and what's happening there, and some indicators that have come through have been very encouraging indeed. The first and most important thing is the fact that most of the resource sector indices, stocks, commodities did not make new lows in 2009. Their lows were seen in that October, November, December period of 2008. And if we look at things like the China Shanghai Index, the Hang Seng in Hong Kong, those indices did not make new lows in 2009. The copper price, the oil price, now the zinc price, nickel price, they're all improving, and the stocks like BHP have done very well so far into 2009, but no sign of these things wanting to go back and make new lows. The other very, very important thing is that the $1 has not gone to revisit new lows in 2009. In fact, it's made a new high, about a 6-month high at 73 cents and above, and it looks as if it's going to go higher than that. So the markets are telling us that the commodity sector, resource sector, the inflation, the hard asset sector are doing better than the broader markets. Now, if we think about what's also been happening, the lows were seen October, November. That means we've had 5 months of bottoming phase in the resource sector, and what we've seen this week in particular is quite strong performances from the small caps. Now that's also very, very encouraging. A lot of these things have fallen over 90%, and they're now recovering, and they look as if they're also going higher. Now, the interpretation you could make of the markets at the moment is that we have seen one extraordinary inventory readjustment. Sure, the United States has got problems in its banking system and its economy and so on, but what we've really seen is wholesale destocking everywhere, from the commodities right through the manufacturing goods and so on. And with the problems that we saw with shipping, the letters of credit problems, it really means that inventories of manufactured goods, particularly here in Australia, have actually been dwindling. So if things start to free up and the consumer is showing more confidence, I think we're going to find that there's going to be demand all the way along the pipeline. Now, in the resource sector, this is particularly important because the inventories of most LME metals and other commodities are still really quite low. They might have shot up in percentage terms, but in available tonnes for consumption on a monthly basis, they're really quite low. So copper, which got over 500,000 tonnes and it's now fallen nicely under 480,000 tonnes, that stockpile really only represents still 10 or 11 days. Even aluminium, which has got bloated stocks and it's got other structural issues behind it, it's still only got about 30 days of inventory there. So these things are still tight. The other thing that we really should be looking at is the amount of cash that's sitting on the sidelines. In the United States, there's clear evidence that $9 trillion, which is earning less than 0.2% annualized, is going to have to flow into the markets. Dividend yields are higher than that in stocks, and we still see that cash, together with a weakness in the bond market, will provide cash that will go into equities and into resource stocks and commodities in particular. So the outlook, I think, is improving all the time. Things to watch for: sure, copper's looking good, oil stocks, energy stocks are looking good. We particularly like gold at this stage because the gold price has made its peak nearly 2 months ago. It's had a lot of sideways movement and looks to me as if it wants to move higher, and some of those gold stocks look extremely attractive. And the other thing that we really like very much is uranium. The uranium stocks this week, or over the last week or so, have been very strong, and they're going to go a lot higher. So focus on gold, energy and these other commodities, and I think people will find a surprisingly strong market over the next 12 months.